What is going on, everybody? It is Josh and Aaron from the Finlay Mortgage team, and today we have the pleasure of having Kory Mackinnon on our live stream today. It's an absolute pleasure to have him on here. Kory is a real estate investor in the South Ontario. Many of you probably know him from Instagram or his coaching. He has a phenomenal coaching program, and he helps people from coast to coast across the country scale their rental portfolio. It's an absolute pleasure having him on here today.
Hey everybody, thanks for having me on.
Hey Kory, what's going on?
Not much. It's a beautiful day out there, but I always tell people I'm kind of wearing black here, not because I'm going to a funeral, it's because of this latest interest rate hike, which I'm sure we're gonna talk about 6 ways to Sunday today. So
morning of the sub 2% rate. So
that's right.
Yeah, no, it's
we'll have to wear black until like rates actually go down, so it could be a while.
We'll send you a white shirt in a few years.
I think we all got the memo today, so we're all wearing black. So
it's it's definitely precarious times in the market. There's a lot of things moving, a lot of things shifting, information coming from every which way. So we thought we'd have you on here today, talk to a resident expert about boots on the ground. You deal with a lot of people, a lot of investors. You deal with all different types of real estate as well, multifamily, commercial, residential. So we want to have you on here today just to discuss, the current situation, what's happening, your forward outlook on what's about to happen. It's really just good to connect and talk to other real estate investors.
And I think someone too, just to jump in there, like someone who's had experience investing in a few different types of markets, right? You a ton of experience in the investing, and you've been in the up markets, the down markets, all these different. So I think it's just good to hear someone who's had experience investing in both times, and obviously you've been able to pull out and make a good little success of it from yourself. So nice to hear from someone who has that experience.
Yeah, I'm looking forward to spending some time with you guys too, because just to get some time with a mortgage broker these days isn't that easy. You guys are like run off your feet. So
yeah, it's definitely, we're moving and shaking. One of the big talks, we had our live stream last week with Emma, anticipating the overnight lending rate increasing by 50 basis points. That did happen this week as anticipated. The Bank of Canada has come out the last few days and with very aggressive tones, essentially saying that we are not done. We are coming fast and strong. We possibly might come with a 75 basis point rate hike in the next month. How are you seeing this affect the market at the moment?
Well, I think it's having the effect that they're looking for, right? And it's not, if people are totally surprised by this, I don't think any bank or anything told us it wasn't going to happen. It was just like, it's happening. It happened, right? I think we'd all like it not to have such a hike in July, but it's, I think it's more like getting past July, like what's going to happen beyond there. Will that have the effect that they're looking for? I hope it will, right? Because everybody wants to have their money to be as affordable as possible. But on the other hand, you got to make sure you're getting into strategies that are going to be high yield anyways, whether it's, getting into vacation properties, some furnished rentals, really, good cash flowing properties. Maybe you go to markets where it's a little bit more affordable. There's lots of things that investors can still do right now. I just encourage people not to totally sit on the sidelines, because there's going to be a lot of opportunity with all the inventory. Some people in smaller cities haven't been impacted as much because that market didn't get as heated. So it's not dropping as much, right? We got some students, let's say up in Thunder Bay, where they're working on flips and their agents are like, hey, it's still going really well. Obviously get your flip done. But, then other markets like London, where it just got flooded with inventory, and people are like, wow, the inventory just doubled or quadrupled in the period of a week or two, right? So lots of things happening all over the place.
I've had a couple conversations with some investors in terms of same thing, asking about, whether they should sit and wait on the sidelines for, prices to continue to drop. I even had an investor who he locked up a property in Oshawa, felt that a couple things. One, he was smartly looking ahead, completing the burn where he was going to be with potential interest rates there and whether or not, it made sense at that purchase price. But, also he kind of gave up the deal in his timeline and said he wanted to wait. So, I think this is something that everyone's kind of wondering right now. And I think for us, from some of the realtors that we talked to and the investors, I think the overall consensus that people are starting to wait until, mid to end summer, maybe coming into fall for that flooding of the market. Which, there's always going to be opportunity there when you have a high amount of properties all at the same time. It does create a bit of that buyer's market. But I think, like you mentioned, there's still opportunity right now, because when 98% of the investors, or all these individuals who are thinking of waiting are waiting, it creates less competition at these points now. And for those who are still aggressive and are still buying, if you can find a deal that still makes sense, you're still going to be able to get a pretty good deal on now. And especially when you have less competition. There's quite a few people that I've talked to who are, listing their own home or looking to buy and have had, little to no competition, maybe 0 offers or 1 offer coming in to compete. And, like I said, as long as it makes sense for you and you're staying within your numbers and what makes sense moving forward, if you're looking to borrow whatever, the cash flow, but you're still going to be able to find opportunities now. You may not have as many on the market, but with less buyers, that opportunity ratio it still kind of evens out a little bit.
Oh, big time. Like, I mean, just inventory. I'm not a realtor, so I don't have like inventory stats, but there's just so much more coming on the market. And, I think there's advantages for investors and for first-time home buyers, or if you're, like, you can actually be picky again, right? You can be selective. You don't just have to go and take whatever's out there. You can look for your school zone that you want to be in. You can look for, the street that you want to be on, perhaps, right? Just with the extra inventory, and you can put some conditions into your offer. I mean, it kind of puts it's becoming more of a balanced market. Is the market crashing? Like, this is what a correction looks like, right? I think it would have to, things would have to continue dropping, and like a true crash is when we have actually overbuilt the supply, and we haven't overbuilt the supply. So, yeah, it's I actually want to encourage people. I think there's great opportunities out there, but they have to pencil out. Like, the numbers have to make sense, and you have to be budgeting for interest to continue going up. Yeah. But I'm talking with wholesalers and stuff as well, because we have some wholesalers that we mentor, and I'm just in touch with wholesalers anyways. And if they have decent deals, and like, they're actually coming up with some pretty decent deals these days, and maybe their fees are lower too. So everybody's kind of getting a little bit of a correction here, and having to be a little more, sharpen the pencil more. But it's I've got 14 furnished rentals, and those are trucking along great in the portfolio, and rents are continuing to go up. I think it's important that people can make sure they get vacant units. You don't want to take on tenants at low rents with these kinds of prices and interest rates going up. So make sure that you're being strategic with how you're doing your buys. Definitely.
Yeah, I think it's funny that you talk about conditions. I was talking to a few different buyers, and they're like, well, we can put conditions again. And it's kind of like, it's funny how people equate certain things to how the market is performing, and like how a slowing market now allows you to put a financing condition comfortably in there again. And it's like, this should be a normal thing. I mean, you should be able to put a financing condition in there, regardless, but it's just funny how, the market timing is kind of equated with that. And, I'm on a few buyers lists from the wholesalers, and I don't think I've seen that buyers list and the leads that are coming out slow down at all throughout the last 6 months now. Like, it's been consistent. Every week I get a handful of new deals that are sent across, and it's consistent. The amount of deals that are still out there, that are still being put out there on wholesale, and I haven't seen it slow down at all. Even in the last 8 months, 10 months, talking to investors, people have still been able to find MLS deals. The idea that deals on MLS are dead, from what I've heard and what I've seen, is inaccurate. It's about doing your research, making sure you're strong in your numbers, where you got to stay within, and just putting the time in and consistently making the offers. And I think in terms of the offer game and putting the amount of offers out there, now is definitely the time to just be putting offers in on things. If you see a property that you have some remote interest in, and you think there could be a potential to get it done, put an offer in, because now is the time where you're not competing with, you're probably hardly competing with even 5 to 6 people these days. I think the offers have come down that low. So, if you're in a position, you have the liquidity and something piques your interest, throw an offer in and see where it comes back in, and, see if you can negotiate from there. But I think people are going to be really receptive right now to offers, and it can definitely be a good time right now to be able to put together some unique conditions and unique financing.
Well, even just to bring up, you guys actually jogged my memory on a point that I brought up with my inner circle the other day. One of our students threw out, he's an experienced investor. He knows what he's looking for. He's looking for conversion projects in the, Horseshoe Niagara area, and fairly new realtor listed it was doing holding back offers on a long weekend, so on May long weekend, which I think less people would have been looking anyways. And then a lot of agents aren't holding back offers unless it's like a really hot neighborhood. They're just kind of taking what they can get with offers, and there was no offers, right? So he basically picked this thing up. They priced it where they wanted to sell, and they bought it at a really good price. So compared to 2 months ago or 3 months ago, the peak of the market, they just saved $100,000 to $150,000, and it totally makes sense for a conversion. At the peak of the market, it's like, man, those are really tight numbers, and construction is expensive these days too. But he's sitting pretty, and this thing will work as a duplex conversion or a triplex conversion. You can do the third unit later. So, there's going to be a lot of holidays coming up in the summer, and true investors will still be peaking at those things, even though they're on holiday. So I want to encourage people, if you're an investor here listening, don't totally take off to the cottage without a cell phone signal, where you can at least check out what's still hitting the market. I've picked up properties on holidays. I've looked at properties on holidays. Hottest day of the year, coldest day of the year, like, it doesn't matter. There's deals don't sleep, so make sure you're still taking swings at things for sure.
100%. We're seeing a lot of opportunity right now, whether it's wholesales, whether it's off-market, on-market deals, multifamily properties. Cap rates are starting to increase again. We're definitely seeing that that demand for properties kind of decrease a little bit, but like the supply increase exponentially very quickly. I don't think I've ever seen a time, I guess, as we've been brokers, where inventory went from literally nothing to a flood of inventory. And if you are buying, or if you're looking to buy, we're seeing a huge shift right now from maybe investors kind of holding off to people who are first-time home buyers who maybe thought, I'm literally never going to buy a house again. Like, the opportunity is fleeting away from me, and it's not going to happen. And this is the time where we're seeing a lot of people take advantage of that situation and maybe, put multiple offers in, get a decent deal on a house, buy that duplex, buy that owner occupied triplex. Those investment strategies that we've been talking about, that you've been teaching, those are the ones that you're going to have to implement in the next, now to next 12 months, when, as interest rates continue to increase, supposedly values will decrease, and demand, it's going to be tougher to get into a property. So understanding those investment strategies of the house hacking, or the, using an insured product to get into a triplex or a fourplex, utilizing the capital you have to get into those projects. This is going to be the time where you take advantage of that. So, if you're fearful, or if everybody's fearful, this is the time when you should be hungry and start taking a look and understanding your options, because, all of the wealth is usually created in a down market. And if you can understand how to invest in that properly, this is going to be the time in which you can take advantage and capitalize for sure.
Yeah, make sure people are looking at their total cost of borrowing, right? It's, as rates go up, prices should be coming down. And actually, one thing it'd be interesting to see, I mean, it's probably too early to tell, but depending on how long they keep increasing rates for, will they actually let people like you guys increase the amortization, right? Like, will there be, will 35-year mortgages become more popular or something of that nature, right? Who knows? I guess we'll see. But otherwise, people really have to double down on their day jobs and their businesses to go really just put your head down, make more money. Making more money always solves a problem, right? So.
And when it comes to a market like this, we are in a man-made recession, or we are moving into a man-made recession. This isn't a situation where there are no jobs. There is currently an excess of capital everywhere, and there's still jobs. You walk down the street and you'll see 10 places that are looking to hire people. So if you want to go make money, the opportunity is still out there to do that. As you said, take advantage of it. Go out there and get it done, because.
Well, not even that too, but I mean, you take a look at social media. Like, you don't even need to go to a physical job anymore. Like, you find a niche, you find something that you can talk about. I think there's a real big shift in where employment is happening, and where the money of income into jobs is, and there's a big push on the social media, and the amount of entrepreneurs out there that are finding a way to make money just talking, doing podcasts, being coaching. If you have some sort of experience, there's now is the time to take advantage of that, and you don't need to go get employed. The self-employment space is monstrous right now, and that that space is what's going to keep on making money. And you take a look at the amount of people who are able to the income divide throughout businesses and just everyone over the pandemic. Everyone who was employed, or a lot of people who were employed, faced some sort of issues. If they were, especially in like hospitality, there's a lot of layoffs, all the medical staff, all the ups and downs they were having there. But the self-employed people were still able to find ways to make money. And, that income was, one of the sections that really didn't decrease at all over the pandemic, and maybe probably increased for a lot of people. I know for us, we took that time of being trapped indoors to build business plans and put that together, and started with our marketing and our social media. And we took off over the pandemic in terms of really doubling down on our business plan. So
big time. Never worked harder. I mean, I got caught up in the pandemic in the first month. Is the world going to end? Who knows? It's all good, but it's important for people to grind. It's not a bad thing. Maybe a question for you guys on the mortgage side. Like, have you seen some lenders just being like more risk adverse? I've heard that there's some credit unions that are just like, we're just not going to lend until Q4. Like, what are some things that you guys are seeing with the big banks and the B lenders and maybe credit unions and things too?
That's a great question. So I'll talk about commercial. You can talk about res and private. So the commercial industry right now, things are tightening up. I think when you have moments in time when things move very quickly, whether it's values or rates, banks become extremely cautious because their entire business model is to make money, not to lose money. So if they're doing leveraged investments, they want to make sure that they're not underwater on their investments. So a lot of banks right now, they are tightening up on their underwriting. Now, they always have these underwriting specifics. So whether it is you can't refinance within the first year, or specific requirements for capital reserves, things like that kind of got pushed to the wayside when money was free and everything was going swimmingly for everybody. But as DSCR rates stays consistent, but your interest rate increases, numbers are getting tight. Capital's getting tight. There's a lot of talk about defaults for people who maybe are underwater. So banks are tightening up right now. We've had banks that have specifically come out for people who are looking to reposition their multifamilies within the first year. Unless you're extremely strong, they're sticking to that. You haven't been in this loan for a year. We're not refinancing you. We're going to give you the total purchase price plus the cost that you put in to do the project. And that's it. We're gonna make you wait until the 12 months. Or we're having people who are specifically being required to have, do you have this $120,000 or $150,000 of liquid capital available for your capital reserves? And questions that have never been asked before are now being asked again because
some of these conditions, right, that were never really never really came up for you guys. Like I chat with a lot of different lenders and things. They're like, now they're pulling these ones out. It never seemed important before, but now it is, right? So
it's you have these conversations with your clients, and when you start a project and you're like, yep, you got to do this, you got to do this, you got to do this. Refinancing should be swimmingly as long as you can, meet these requirements. You go and submit the application, and it's like, oh yeah, by the way, actually we tightened everything up, and you need this. So just aligning your expectations with what's actually in the market at the moment is really important. Now, we're able to find solutions. There are many different lenders in the market, and as long as you're not buying in the middle of absolute nowhere, you can take a look at a few options and figure out what that looks like. But things are tightening up. Banks are getting a little bit more strict. They want to see that you are a strong borrower. I think flashbacks of COVID and when there was government intervention and people were deferring payments, that's coming back as a fear. So they want to make sure that the strength of a borrower is there. So on the commercial side, make sure that your numbers are reflective of what's currently in the market. So right now, most banks were qualifying at contract rate, the 5-year contract rate for a multifamily commercial product. Now, what they've done is they're actually stress testing. So they're adding points to that 5-year contract rate to qualify for a loan because they're anticipating the Bank of Canada is going to be increasing rates. So while you're in your loan process, they're anticipating at some point that Bank of Canada is going to increase that rate. So it's becoming even more challenging now to qualify for your takeout financing or your acquisition financing. So when you are running your numbers on your multifamilies, just make sure that you understand what's happening because their rates are based off of cost plus, meaning they have a cost of funds, and those cost of funds plus an additional, say, 2.25 points is what it's going to cost you to be able to your 5-year fix. So that is consistently changing depending on the bond market at the time. and it could be something one day and 50 basis points again the next day. You're gonna have to keep a finger on the pulse if you are looking to reposition a building at the moment to understand what the climate is and what's happening.
Yeah, and some other things too, like in terms of underwriting, when we're taking a look at expenses that we use, I found banks are caring less about who the borrower, like similar to what Josh said about less about the borrower, but they're focusing more on what happens if the bank has to take over this asset. So I just finished working on a multifamily for one of my hiring clients. He's managing close to about 100 or maybe over 100 units right now, pretty much all multifamily. But I wasn't able to get away with a self-managed. I wasn't able to get away with not using that management fee. So this is a guy who's got his own, admin and repair crew in place, ready to go. His whole living is on these management. And from the bank's perspective, they said, well, if we have to take this building back over, we're going to pay a management team. So we want that cost in there because we want to make sure that it's going to be there in case of a worse outcome. Same with the vacancy. They were building the numbers based on them taking that mortgage back over. So again, it's the shift is less on, the strength of the borrower, but more so what is going to be the best for the bank, in a worst case situation. So seeing little shifts like that, the ability to hold a rate, you're getting maybe 25, maybe 30 days if it's depending on how good of a deal it is. But yeah, if that deal isn't closing in 30 days, there's a chance that commercial rate is going to increase. And when you take a look at most commercial deals, don't even really close in 30 days. Usually you're at least 5 weeks. Chances are you're probably going to see a small bump in your rate throughout the term of you closing that mortgage. So just things like that. Like we had a lot of clients who, starting at January, February, March, we were underwriting at mid to high threes, and through the lifetime of that transaction to closing, loans were getting withdrawn, interest rates were going up. I had a client who, when we originally qualified, we had room for a VTB, but then come time for closing, rates had changed so much that they couldn't hold that original rate, and we had to lose the VTB, and we started at 85% and we're down to 68% at closing. So that market shift had just swung so much, it was so aggressively that the lenders just weren't able to commit to those original values. And it had changed quite a bit, from March till about now. You're 2 to 2.5% change in rates for depending on where you were at the lender on the commercial side. So it was quite a big shift. Yeah,
it's unbelievable. That unprecedented.
You wouldn't want to be an appraiser these days, man. They're giving everything a haircut.
Yeah,
that's a good point. So one of the larger banks in Canada actually have come out to NAS, which is like their specific third-party appraisal software. And essentially, they're not taking any sort of comps that have sold before after 30 days. So essentially, like the most recent comps is what they're using right now. And unfortunately, we've had many situations where values have come in less the day before, the week before, and large amounts of capital have had to be found to be able to close on conventional properties. So keep in mind, if you have a 90-day closing, it isn't uncommon at the moment for a bank to request another appraisal if you had it within 60 days, 30 days. Yeah. So keep that in mind. I know that, Kory, you're a little crunched on time, but before you go, is there any advice that you'd have? You said you've gone through up markets, you've seen down markets, you've gone through the cycle. You've obviously seen investor sentiment and emotion come into factor. Is any advice that you'd have for anybody watching?
Yeah, I got some more time for you guys. It's a great chat we have going on. I have one more question for you guys, but as far as advice for people, it's interesting. There's a really great book out there I'd recommend to people. It's called Thinking Fast and Slow, and it's all about just making sure that you have your mindset straight when you're buying, whether it's stocks or an income property. You want to make sure that you don't play against yourself too much, right? Like we're always our own worst critics, and sometimes we can overthink things too much. Like things like holding costs and lost opportunity costs. I mean, they're all real things that you have to factor in. But too often people might be too pessimistic, and some people might be too optimistic. So just make sure that you've got the right mindset going into different things, and the numbers have to pencil out. It's really important. But there will be opportunities out there, right? So don't be kicking yourself in 5 years going like, man, I guess I missed out on a bunch of different things here, right? It might take a little bit more work to do it, but the inventory is on the market. There's going to be more motivated sellers, even on the off market. I was kind of curious with you guys, like, do you think there'll be an uptick in insurable products? Like if people want to put down only 15, 10 or 5%, if that's even a thing anymore, but, do you think there might be more scrutiny with insured products?
Yeah, I would say that insured products are definitely being looked at under a microscope right now. So, as we move into an election year and, there's a lot of pressure from the millennials about being able to own a home. Now, we had a conversation, I think last week with Sagan about what's happening in the market, expected changes with their insured products. Before COVID, they were pushing very hard for an increase in the insured amount. So they're looking for a $1.25 million increase, to $1.25 million and possibly $1.5 million in the GTA or like Vancouver areas. They are looking at different options to help people in an ever-changing market. I do think they're going to have to amend these specific products to help people get into homes. The average person, the average millennial or family doesn't have a few $100,000 or $250,000 to gift a family member to get into a home. And home ownership is something that is really important to all Canadians. I think that they're going to have to create a way to be able to do it. And you see it in Europe. You see 100-year mortgages, and unfortunately, it kind of sounds morbid a little bit, like 100 years of mortgage. But to be able to get into a home, the industry is going to have to adapt. The government's going to have to adapt. As you see interest rates increase, we have never seen a time like this when people have so much debt. Back in the 70s, people had $60,000 homes, and people are saying, oh, 16%. That might have been manageable at the time, but we now have $800, $900 million mortgages. And when you start to go up 1%, 2%, 3%, $800 a month, $900 a month on a fixed income, in addition to what you already have, is going to put a lot of stress in the economy. So the bank is going to have to come up with certain ways to help our economy get through this. And they will. Our entire country isn't going to go bankrupt because
there's a lot more intervention now. They can manipulate the whole financial system with rate hikes and rate decreases and whatnot, right? So if people are thinking that we're going to have what we had, in the 80s, it's kind of comparing apples to oranges. It's two totally different eras, two totally separate situations. So, I'd just people need to actually be a little bit more skilled, right? They have to actually make sure the numbers really, really make sense and be a smarter investor too, right? I mean, anybody looks like a genius buying any kind of, piece of real estate here for the past couple of years, but now it's like, hey, you have to actually work hard for the deals and make sure the deals make sense. So I think it's going to be a great way to shake out the boys from the men per se. Only the strong will survive, and anybody can level up their game here too, for sure. So
I think especially like those who, obviously the BRRRR strategy is a very prominent and widely used strategy, but, not just focusing on acquisition, but looking ahead. We're probably going to be in this for the next year and a half. So, year and a half to 2 years, and, the average BRRRR is under a year. So, keeping in mind that as you're running your numbers on the takeout, stress test those numbers, add another 50 basis points, make sure that in a worst case scenario, are you going to be able to afford it? Is your cash flow going to be there? Do you need to prepare for a little bit? Are you going to be coming out of this BRRRR in the red a little bit? Just making sure what to come, because the last thing you want to do is, be aggressive throughout this, this small drop in pricing, and then come out and, all of a sudden you're shorting cash flow and you don't have those reserve funds to be able to make up for that. So just dialing in the numbers. I think we keep repeating this every podcast we do, but dial in the numbers, make sure what's going to be comfortable. Are you a cash flow person? Are you, an equity person? Like, what pathway do you want to be on? And just make sure that everything you do moving forward is within that pathway. What are your margins? Can you have this much over, this much under? Like, what works for you? And that's really what's going to allow people to continue to succeed without having any issues in a market like this.
Yeah, maybe people might need to do the renovations in stages or phases, right? Or maybe they got to do a little bit more of a frugal type of an apartment turnover. Maybe they don't have the budget to rip out the cabinets, but they can paint them, or they can change handles and countertops and do paint instead of the flooring. I mean, they can always tighten up a little bit. I think everybody should tighten up based on their situation. It's not a bad thing, right? So
Completely agree. I think you're going to see as things tighten up, interest rates increase, people stop spending excess money, and things like that happen. There are still people who make a ton of money in this type of market. So a lot of calls we get are fearful calls. I wouldn't say people be fearful. I think just be mindful. Understand where you're at. Understand this isn't the first time this has happened and that markets do shift. And as long as you're smart and understand where you're at, and will always be opportunities for the one who's looking for it.
Yeah, be smart. Don't be reckless. It's important. But hey, guys, it's been an absolute pleasure getting to spend some time and get. I wrote down a couple points here that I think was interesting just to see that. Yep, banks aren't holding rates for more than 25, 30 days, and no comps past 30 days. It all makes sense, right? But it's great to hear it from the horse's mouth from you guys. So thanks for spending the time. I'm looking forward to taking over the channel in the month of June here as well. So that should be a lot of fun.
Hey, Kory, it's been an absolute pleasure. If anybody wants to get in touch with you, they could. How can they contact you?
Yeah, you can just find me on Instagram under Kory Mackinnon, KoryMackinnon.com. We also started a YouTube channel as well, so you guys can just look up Kory Mackinnon's YouTube channel and go follow along there as well.
Phenomenal, guys. Well, everybody, thanks so much for tuning in today. If you guys have any questions, all of our contact information is going to be down below. If you liked what you saw today, please hit the subscribe button, hit the like button. It helps with the algorithm and allows us to be able to get in front of you guys as much as possible. Again, phenomenal time here today, guys. Have a great day, everybody.